In this section, we will explain what are the factors that make Yelp, AutoZone, Lowe's and other companies flourish in the stock market, such as their business models, competitive advantages, growth prospects, etc. Yelp is a community review site that connects users with local businesses. Its business model revolves around offering users reviews of local businesses from real people, as well as offering businesses a way to reach local customers looking for where to make a purchase. Yelp generates revenue through the sale of tailored advertisements to local businesses, partnership commissions, and service tool subscription fees. Yelp's competitive advantage lies in its large and loyal user base, its rich and diverse content, and its ability to provide specialized customer service that its big-box retailer and e-commerce competitors cannot match. Yelp's growth prospects are driven by its opportunities to expand internationally, to increase its penetration in the services categories, to leverage its data and insights to improve its products and services, and to diversify its revenue streams. AutoZone is a leading retailer and distributor of automotive replacement parts and accessories. Its business model is mass market, with no significant differentiation between customer segments. The company targets its offerings at all consumers who seek auto replacement parts and accessories. AutoZone generates revenue through the sale of new and remanufactured automotive parts, maintenance items, accessories, and non-automotive products. AutoZone's competitive advantage lies in its extensive store network, its efficient distribution system, its strong customer loyalty program, and its superior customer service. AutoZone's growth prospects are driven by its opportunities to increase its domestic and international store count, to grow its online sales channel, to expand its installation services, to enhance its product assortment, and to benefit from the rising demand for auto parts due to the increasing average age of vehicles on the road. Lowe's is a leading home improvement retailer that operates a broad network of retail outlets. The company's product line caters to customers that are interested in home improvement and DIY projects, as well as general consumers that are in the process of renovating or decorating their properties. 10. Lowe's generates revenue through the sale of home improvement products such as lumber, hardware, tools, paint, plumbing, flooring, appliances, cabinets, countertops, lighting, outdoor power equipment, lawn and garden supplies, etc. 10. Lowe's competitive advantage lies in its wide product selection, its competitive pricing strategy, its omni-channel retail experience, and its strong brand recognition. 11. Lowe's growth prospects are driven by its opportunities to gain market share in the highly fragmented home improvement sector, to invest in digital capabilities and innovation, to leverage its customer data and analytics, to grow its installation services and pro-customer segment, and to benefit from the favorable trends in the housing market. 11. These are some of the factors that make Yelp, AutoZone, Lowe's and other companies flourish in the stock market. They have unique business models that cater to different customer needs and preferences. They have competitive advantages that differentiate them from their rivals. They have growth prospects that enable them to capture new opportunities and markets. They are well positioned to capitalize on the current and future trends in their respective industries. In this section, I will compare and contrast the performance of Yelp, AutoZone, and Lowe's with the broader market indices, such as the S&P 500 or the Nasdaq, and show how they have outperformed or underperformed them over different time periods. First, let's look at the year-to-date performance of these stocks. As of May 23, 2023, Yelp has gained 19.75%, AutoZone has lost 5.34%, and Lowe's has gained 3.04%. In comparison, the S&P 500 has gained 10.83% and the Nasdaq has gained 6.33%. This means that Yelp has outperformed both indices, while AutoZone has underperformed them by a wide margin. Lowe's has slightly outperformed the Nasdaq but underperformed the S&P. Next, let's look at the one-year performance of these stocks. As of May 23, 2023, Yelp has gained 10.53%, AutoZone has gained 39.77%, and Lowe's has gained 21.18%. In comparison, the S&P 500 has gained 40.02% and the Nasdaq has gained 43.87%. This means that Yelp and Lowe's have underperformed both indices, while AutoZone has outperformed the S&P 500 but underperformed the Nasdaq. Finally, let's look at the 5-year performance of these stocks. As of May 23, 2023, Yelp has lost 9.97%, AutoZone has gained 67.62%, and Lowe's has gained 115.03%. In comparison, the S&P 500 has gained 104.32% and the Nasdaq has gained 175.71%. This means that Yelp has underperformed both indices by a large margin, while AutoZone has outperformed the S&P 500 but underperformed the Nasdaq. Lowe's has outperformed the S&P 500 but underperformed the Nasdaq. In summary, Yelp has been the worst performer among these 3 stocks over different time periods, while Lowe's has been the best performer over the long term. AutoZone has been a mixed performer, depending on the time frame and the benchmark index. These results may reflect the different business models, competitive advantages, and growth prospects of these companies in their respective industries. In this section, I will provide some tips and advice on how to identify and invest in similar companies that have the potential to flourish in the stock market. These are companies that have a strong business model, a competitive advantage, a positive revenue trend, a high net income growth, a good profit margin, a low debt-to-equity ratio, and a reasonable price-to-earnings ratio. These are some of the key factors to look for before investing in a company. One of the ways to find these companies is to use fundamental analysis. This is a method of evaluating a company based on its financial statements, its industry, its competitors, its customers, and its future prospects. Fundamental analysis helps you determine the intrinsic value of a company and compare it with its market price. If the intrinsic value is higher than the market price, then the company is undervalued and may be a good investment opportunity. Another way to find these companies is to use technical analysis. This is a method of analyzing the price movements and patterns of a company's stock over time. Technical analysis helps you identify trends, support and resistance levels, breakouts, and reversals. Technical analysis can help you time your entry and exit points and optimize your returns. A third way to find these companies is to use valuation metrics. These are ratios that measure how cheap or expensive a company's stock is relative to its earnings, sales, assets, or growth. Some of the common valuation metrics are price to earnings, P/E, price to sales, P/S, price to book, P/B, and price to earnings growth, PEG. These metrics can help you compare different companies within the same industry or sector and find the ones that offer the best value. By using these methods, you can identify and invest in flourishing companies that have strong fundamentals, attractive technicals, and reasonable valuations. These are the companies that can generate consistent profits and growth for your portfolio.